10.51 this morning.
No.
But let's see the Aussie dollar as well, the commodity currencies, eh?
Commodity currencies, but the commodities keep going, so
I know.
explain that.
You see that? I mean, the Aussie dollar's down 1%, eh?
Yeah. Aussie as well, I mean, they were held by the currencies, obviously only down like 40, 50 points.
Right, morning guys, let's get started. Right, stocks continue to trade lower throughout the day as the prospect of US military involvement in Syria becomes increasingly real. So far this morning we've bounced up 3 points from the low yesterday, but still quite a big sell-off in the S&P last night, down 26 points to 1630. Consumer confidence data unexpectedly jumped to 81.5, with income expectations in particular rebounding to the highest levels in over 2 years. So some good news out of the States, but obviously not enough to keep it up. And so here's a chart Claudius has made for us, just starting from when the news came out of Syria. At the top there you can see it's the oil price in red. It's obviously had the biggest spike. The rand and the gold price in blue and green there, sort of in the middle. The rand's obviously weakened quite a bit, and then the gold price has jumped. In white there we've got the dollar index, which has remained reasonably flat. And I'm not 100% sure what that is at the bottom there.
Which one?
Oh, sorry, that's the S&P. Yeah, so that's showing the inverse correlation between that oil price spiking and the S&P right at the bottom in grey. Okay, then corporate action today. We've got Murray's guidance R1.86, came in slightly better than the Bloomberg expectations of 180. Revenue 33.58, and they're not expecting any dividend, so that's coming out this morning, or at 5 o'clock. Sorry. This morning AMCU rejects the gold wage raise offer, so I'm not 100% sure if that is the reason that the rand is so weak this morning, but it's definitely not going to help the rand. Key factors today, 10 o'clock this morning, we've got Italian retail sales, M3 money supply out of Europe. Then this afternoon we have US MBA mortgage applications and pending home sales. And then at 2:45, the BOE Governor Carney speaks in Nottingham. I think the market is watching because he's promised to keep rates low to 2017. I think the market's skeptical of that, and so the market just wants to see if he continues to maintain that stance. All right, let's have a look what's happening in the charts. Let's start with the Aussie. Yesterday, obviously, we had major sell-off in world markets, all over. The DAX and most of Europe was down over 2%. S&P was down 1.6%, and we only managed to lose a few hundred points, mainly because of the much weaker rand, supporting a lot of our rand hedge stocks. I see we've opened down slightly this morning. We're still trading probably, basically at that breakout point from the small consolidation that we've had, but we can see we're sitting right on the top of that trend line. So there is, if the market holds up today, there is a chance that we get up and test that resistance line again. But I do feel that world markets are starting to feel on the back foot a bit. And so we could actually reverse off that line. I would say if you want to be prudent to get short, you probably want to wait for a move below this rising trend line as support. If we bounce off that rising trend line, we could make all-time highs again. If we break below it, then I think it might be a good selling opportunity. All right, let's have a look at Anglos. Anglos has been a really solid performer, obviously helped by the rand. You can see we've moved above this this sort of quite a key level here at 240, and we've consolidated around that level and pushed higher. Yesterday we closed marginally lower, but with the rand weaker again this morning, it's going to have to sell off quite a bit in the UK to actually get it down. let's zoom out on a 5-year chart and just show exactly what we've been looking at over the last year. We've been looking at how this head and shoulders has been playing out, and if we look at the key levels on its way down, there's a chance that we can continue this rally to 257 as long as the general market holds up. Obviously, if we have a major sell-off in the general market, then anglers will go down with it. But there is a chance to that we go see that 257 level. If we do reverse from current levels, it looks like we might be forming an inverse head and shoulders here. So if we do get a sell-off in world markets, I'd like to see it get down to the 215, 220 level. I think that could be a great opportunity to get long with us on a reversal day. Okay, let's have a look at some of the retailers. Foschini's has been in a downtrend, as we can see, over the last year, pretty much, or for this last 6 months at least. Formed a double top, has failed, consolidated around this sort of 103 level, 104 level, and it's been a tight consolidation between, well, I guess it's not that tight, it's quite big in percentage terms, but between sort of 92 and sort of 97, it's formed a rising wedge or a bear flag, and I would say a close below sort of 97.50 would break below and send a target right down to this sort of 90 level or below 90. Obviously 103 on the would be resistance on the upside. You know, it tried to spike up on the interest to buy the RCS division, but it hasn't been enough to really get it going, and it's sitting very close to that support at the moment. If we look at Truworths, similar kind of thing. It's been in a downtrend. You know, these credit retailers are obviously struggling with the rising interest rates, so this is probably a sector to be looking to short, if anything. I wouldn't be going long with them right now. And a break below this sort of 81, you might, if you're prudent, you might want to see it break 80 for this next move down. There's a possible 15 rand from the breakdown, which would send it down to 65, which would be the lows, or sort of a major level around the in 2000, around mid 2011. Then let's have a look at ShopRite. Obviously not a credit retailer, but still getting beaten down here. Yesterday, if we draw this line from the closes, it pretty much closed right on support of this this sort of wedge that's been moving down over the last little while. Definitely one I'm more bullish on than the credit retailers, but it hasn't really been able to get through this or make much of a bounce off support now. So that's what makes me nervous. A move below this level could see it move significantly lower, although I don't really like the short on this one, and I would rather wait to see a good bounce off this level for an opportunity to buy. And then I just want to look at the gold price, the gold stocks, and the gold's had a massive reversal from yesterday. Yesterday, when we left the office, Anglo Gold and Gold Fields are trading, upwards of 3% in our market, and I see in the States they actually ended up down. Anglo Gold was down 3% and Gold Fields down 2.5%. So they're actually trading in the States quite a lot lower than we closed, which is quite surprising given how strong the gold price was and how weak the rand is. So if we want to look, I think commodities we're looking for to buy pullbacks at the moment. I think a lot of them have turned, but there could still be a reasonable pullback in these things. I would say if we can get a reversal off this, where the 20-day and the 50-day moving average indicated in yellow and green over here, if we get a nice reversal off that level, let's call it 136, that could be a good entry point for Anglo Gold. They closed 146 in the States, so there would need to be a little more of a sell-off in order to get there. And then the last one on the show is Gold Fields. Gold Fields forming a bit of a rough inverse head and shoulders like the Gold Corp chart I showed you yesterday. But let's draw a trend line in there. I'd say if we get a test possibly of the 50-day moving average in green or our rising trend line here, at 52. If we can get a nice reversal of that level, that could be a great place to start entering goldfields. Goldfields close in the States at 57, so it would be a good 10% lower than where they closed in the States. I think if we do get down to those levels, these resources I want to start looking to buy. And that's all for today, guys. Thanks a lot.